Good morning and welcome to the ADS Securities Markets Update. Beginning with the Asian session, as always, we had a collection of economic releases from New Zealand, China and Japan, which had a notable impact on the markets. Beginning with New Zealand, the jobs report came in much better than expected. Basically, the employment change increased by 0.8% in the third quarter, comparing to 0.5% in the second quarter, which is also the highest monthly or the highest quarterly increase since Q1 of this year, while the estimates were to rise only by 0.6%. Then the unemployment rate also fell sharply toward 5.4% in the third quarter, comparing to or down from 5.6%, while the estimates were to decline toward 5.5% only, while this is also the lowest level since the first quarter of 2009. In Japan, the average cash earnings also slowed down further, or unexpectedly slowed down towards 0.8% in September, down from 0.9%, while the estimates were to remain stable at 0.9%, and this is also the lowest level in 3 months. In China, the HSBC Services PMI came in with another disappointment, declining toward 52.9 in October, down from 53.5 in September, while this is also the second monthly decline in a row. As for the European session ahead today, we will be waiting for a collection of economic releases, especially for the services sector, where the Services PMI will be released from France, Spain, Italy and the UK, in addition to the Eurozone. Most of these figures are expected to be weaker for the month of October comparing to the month of September, and basically also the Eurozone retail sales will be released today. The estimates are to decline by 0.6% in October, comparing to an increase of 1.2% in September, which would be, if it came in as expected, the decline would be the biggest monthly decline since February of this year. In the UK also, the Services PMI is expected to decline slightly toward 58.5 in October, down from 58.7, which would be the second monthly decline in a row and the lowest since also 3 months. As for the US session today, we'll be waiting for the ADP non-farm employment change, which is the new jobs in the private sector. The estimates are quite good for the month of October, to add around 214,000 new jobs in October, comparing to 213,000 jobs in September. And finally, the ISM non-manufacturing PMI may come in with another decline toward 58.2 in October, down from also 58.6, which would be the second monthly decline in a row and the lowest also in 3 months. Finally, yesterday we've seen, or since the beginning of the week, we've seen many negative figures for the US economy, which basically led many of the major banks to revise their forecast for the US GDP for the third quarter of this year. Basically, last week we've seen the consumer spending declined by 0.2%. The construction spending also this week declined by 0.4%. That's for the month of September. The factory orders fell by 0.6%, unexpectedly by 0.6%. And most importantly, we had the trade balance deficit increased by 7.6% for the month of September. So basically, the major banks had to cut the Q3 GDP, or to be revised down again by 0.5%. That was yesterday. So basically, if we cut off also the spending, or the defense spending, which added 0.6%, so the real GDP would have been less than 2.5%. So we'll be watching these figures for the next couple of months to revalue or devalue the US economy, if it's going to continue to expand without the Federal Reserve support. So this is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.